AI agents have technically been able to make payments for a while, but technically doesn't mean anything until a company processing $1.9 trillion a year decides to build the entire financial stack around it. This week at Stripe Sessions, that's exactly what happened. Stablecoin wallets, machine to machine payments, 101 countries, and no bank required. The infrastructure just became the product. Meta just started paying creators in stablecoins. They're not starting in the US, they're starting in Colombia and the Philippines. Stripe just turned its treasury into a stablecoin bank for 101 countries, and A16Z published a market map that basically says the new global financial system isn't coming, it's already here. This week on What's the Hype, the stablecoin stack is going from infrastructure to product, and we're breaking down what that means for every crypto enthusiast and founder in the room. With me today, I have my VP of Narrative, George, my VP of Strategy, Maria, and my VP of AI, Rabin. How's it going, guys?
Good.
Well.
VPs.
Yeah.
Everyone at
Super-
Hype's a VP.
That's true.
No, only VPs are invited to speak at this podcast by Ashley because she's snob. No, we should actually invite someone else from the team as well.
I need to be VP of podcast. I request a promotion, please, and thank you.
Granted.
Perfect. Just let Danny know that one for me. Okay, are you guys excited to talk about stablecoins today?
Always excited about stablecoins, guys.
Woo! We love ourselves a stablecoin.
Yeah.
Let's jump into our first story, which is, oh boy, Meta announced something huge yesterday. They launched USDC payouts for select creators. They're starting in Colombia and the Philippines via Stripe on Solana and Polygon. They're not issuing their own token. They're actually using Circle's USDC. The Polygon CEO says expect expansion to 160 plus countries by end of year. This is Meta's first real crypto move since killing Libra in 2022. Meanwhile, Blockchain Capital is raising $700 million for 2 new funds, despite the down market, which is signaling to us major institutional conviction in the stablecoin thesis. And today, while we are speaking, Mega ETH launched its Mega token with a TGE gated entirely by stablecoin usage milestones. Their native stable USDM surged from 63 million to over 300 million in a single week because the token literally couldn't launch until the ecosystem proved stablecoin activity. So Binance, KuCoin, and BitGet all listed Mega within hours. Who wants to start? George, would you just absolutely love to start us off?
Of course. I think so. First off, Mega ETH launched today. Pretty interesting. I think there's a graph. Can we pull up the graph showing the DeFi Llama, screenshot with the TVL? Here we are. So as you'll notice, some people are suspicious about ecosystems and whether things are organic. Of course, nothing is ever organic. If you take a look at the TVL there on the right, you'll notice a steep incline from around 100 million to over 300 million in the period of 3 days. And, incentives and outcomes, somebody finally said, okay, fine, I want you to launch this token. Who knows what the deal was, but yeah, looks organic. So that's pretty interesting. I think it's trading at, what is it? It's 2 billion FTV, but lower market cap, obviously, which is maybe slightly lower than I would have thought. It's outside the top 100. I would have thought it might be a little bit higher. I guess that's a sign. That's like the market. In fact, I think TVL and market cap are probably about the same, which is very interesting. So yeah, it's been age. I mean, my God, how long? It's been such a long time. Everyone's been waiting for this. So it's cool. It's cool it's happened. But honestly, kind of like last of a generation. I don't think there's going to be more of these big L2, L1 launches for the foreseeable. If it happens again, it will be in a long, long time. So yeah, it's kind of bittersweet. It's like the last dinosaur. That's the way I'm thinking about it. So yeah. Anybody else got takes on the Mega ETH launch?
I'm really interested in your perspective on like, okay, so we had this era of TGEs, everybody was launching things, and yay, cool. There's lots of marketing activity, lots of noise, one might say lots of hype. And this idea of TGEs going away, but or maybe not going away, but just like decreasing in volume of token launches that we're seeing. That's compelling to me as far as like why is this happening, in addition to how Mega ETH ran theirs in terms of like launching tied to stablecoin metrics, right? So I think my question is, for the TGEs that we do see in the future, does it make sense to tie them to stablecoins like this? Is this a new playbook, even though we're seeing a decrease in the amount of just total token launches that are happening?
Well, I mean, it's an interesting idea. Like, you know, hats off. They actually tried to make something happen on the blockchain, and not just launch a token for the sake of it. But I don't know if it was a good or a bad idea at this point. It's kind of hard to tell. I'd say, I mean, like just pointing to this whole thing about big token launches, obviously fewer and further between. And that's just because there are infinitely more slop tokens being issued. It became way easier to ship a pump fund token. So like everybody's spoken about this like at length, but dilution across thousands and thousands of token launches just means that attention is split, capital split, nobody believes anything, financial nihilism, blah, 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 all that sort of stuff. And then on the other hand, like all the stablecoin stuff, it's boring, it's slow, it's not, nobody in retail is making loads of money off of stablecoins, and stablecoin adoption, it's not as interesting, it's not as sexy, it's hard, it's like, oh God. But like at the same time, that it's cool. Like that's an actual, as product market fit. It's probably the only thing, I mean, perps, stablecoins, what else? Like
Prediction markets.
maybe, you know, prediction markets are the other one, until they get regulated correctly and people realize it's just sports books again. Like, so yeah, stablecoins are like the standout thing that isn't casino based that's being used. And that's pretty much it.
Yeah, you even have Meta going as far as paying their creators out in stables now, which is absolutely fascinating. What happens for the average creator? So like the mass market creator that absolutely hates crypto. Crypto is the number one snoozed keyword on X since the snooze feature launched like a week ago. Is very obvious. People still hate it, distrust it, think it is just a Ponzi casino. What happens to Go ahead,
to these
Maria.
creators? They will create about how they hate crypto until they love it. Like they will make content about why people shouldn't trust crypto, but then they realize that they actually should, and then they will start creating for crypto to get money, probably. I don't know.
Yeah, it could happen.
I mean, this is what I hope. But I mean, or they will be attracted by the money and start to like fake, and then they fake until they make it, probably.
Yeah.
Yeah, I think like because like Meta is focusing mainly on emerging markets, I think we often forget how like a lot of people are on banks or have difficulties with payments, and I think that's where stablecoins come in play, basically.
Come in play, not as because guys, let's be clear, stablecoins are used like the utopian scenario is that stablecoin are used as and invented to be an alternative to fiat currency to give stability to unstable economies, for example, Argentina, South America, whatever. However, we saw recently, have seen a lot of hype towards stable coins, but not for this purpose. always to earn more as usual. So like yield-bearing stable coins, blah blah blah, etc. But yeah, in the ideal world, and like the reason why they were born was to provide stability to, and a use case for the unstable economy, and to remove the middleman and the cost of a traditional financial system, also for the non-emerging economies. Because if I pay with USDC, it's probably cheaper than if I do it with, I don't know now, but like 3 years ago, I paid a fee if I had to do a bank transfer. I didn't, I paid gas, but I didn't pay a fee if I transferred stable coins. So these were the two purposes. But recently, like, it's like the rise of stable coins recently was more connected to earning, I think.
Yeah, you've got blockchain capital at the same time all of this is happening. Like their portfolio is stable coins. It's Coinbase, Circle, Tether. Their LPs are traditional finance. So these are like endowments, pension funds, and sovereign wealth. And so you've got these kind of traditional money saying that they believe in stable coins, and blockchain capital raising during a down market when the portfolio is the stablecoin stack is like very interesting. What do you guys think this means about like where smart money thinks the next 3 to 5 years are headed for crypto? Maybe I'm throwing you a softball question here.
I can say stuff. So maybe if you pull up the stablecoins are eating banking as a service, Microsoft Paint drawing. It's probably helpful. Okay, yes. So I think the way that people are, or like the reason people are excited about investing in stablecoins is basically this disruption. I mean, there's a couple of things like cross-border Remitly and Western Union kind of stuff. It's like, yeah, there's like disruption you could do there. And then there's this whole space of, you probably remember, there's a lot of companies like Starbucks, for example, like offering banking as a service. It's like you get credit with Starbucks and they earn some kind of like spread or like some sort of return on your gift cards. And it's like everybody's a banking as a service app. But now you can kind of cut out all of these old, there's a bunch of blogs on this, but like cutting out a lot of the parts of the stack that were expensive and slow and rent-seeking and fragile and blah, blah, blah. And you can replace it with, you just have like Solana or you just have Base, and you just cut out a huge chunk of middlemen from this stack in the first place. And yeah, everything's just like simpler. Yeah, you can create a fintech far more cheaply now. So like Rabin, like we'd spoken about this before. It's like your user acquisition, like you can justify spending far more, I think, on each individual user you're acquiring, versus like, because you just don't have as many costs to get set up in the first place. So yeah, it's just like a race to the bottom with you can make a specialized banking app. You can make a special, like for example, like people who don't get served by traditional banking apps, crypto people, people who are in professions that banks don't necessarily want to serve, people with different tax requirements and like all this kind of thing. So there's just, you can spin up a specialized fintech app pretty cheaply, pretty quickly. And it's not as slow, as expensive and annoying to get that rolling in the first place. But I'm by no means an expert on this. ChatGPT has generated a beautiful diagram here that explains it far better than I have. That's it.
Yeah, like I remember back in the day when I was working like cold wallet company, and I think there was like a phase where all the cold wallet providers were spinning up their crypto cards, and we're also exploring ways of doing it a few years ago. And you have so many vendors that provide this now. Back then, it was not as accessible, but I think that's why you see also so many crypto cards now, because everyone's a fintech now, basically, by leveraging these providers and tools, basically.
Okay, so everyone is gonna use stablecoins in the future, and crypto degens make no money from it.
I mean,
Let's go. The optimal outcome, honestly.
I think that everyone will use mainstream stablecoins even without knowing it. So maybe my mom will not know that it's a stablecoin. She's just knowing that she's transferring some money from one place to another to her friends via using an app. And degens will use yield-bearing stablecoin instead, or decentralized stablecoins, like so, like my mom will use USDC, USDT. I will use DAI. I still call it DAI, USDS, or CAP, or this kind of weird stable coins, and this is the difference, in my opinion.
Yeah, until one of us starts using like those degen stable coins, and then something like Luna happens again. That'll be fun.
Uh-oh.
Sorry, I'm having Vietnam flashbacks. There's a stablecoins win by disappearing slide as well. I think that explains some of this too. We've got a slide for everything. So yeah, like we're kind of like power users, anybody watching this is probably some kind of a power user, in that we've actually got a hot wallet and we can be bothered to look for these opportunities, which honestly feel like pretty bad opportunities at this point of time, like risk return. I don't want to earn 4% to take on North Korea Lazarus risk. It's like a bad trade. I much would prefer just holding like bonds and stocks and gold or something, instead of maybe a little bit of Bitcoin. But yeah, holding like exotic weird stable coins feels pretty horrible. But yeah, to the point about like Maria's parents using stable coins, they probably, as the diagram says, nobody says, wow, I've used a stable coin. Fantastic. What a fantastic benefit. The benefit is not the name, of course. It's just like the obvious. It's just very obvious, but it's like, I would like to, I am a creator. I would like to do some work. I live in Colombia. I have horrible like local rails. I'd like to earn in dollars instead. That sounds great. And maybe I want to send it across border for some reason. Like maybe I who knows. But using USDC instead is better for that, because you skip all the local disgusting infrastructure. Nothing wrong with Colombia, and you get to get the benefit. So I think it's pretty clear.
Yeah, I mean, if you're the owners of your banks in your country is like the government, and the government literally takes money from the banks and doesn't pay their people back. I mean, I could imagine stable coins being incredibly powerful in those situations. So let's actually move to our second story today, which is Stripe building the bank of the internet, I guess. So at Stripe sessions yesterday, Stripe announced 288 new products. Their headline is that Treasury is now a stablecoin-native global financial OS. Businesses can hold stablecoin balances, convert between fiat currencies, send stablecoins cross-border to 160 countries, issue stablecoin-backed Visa cards, and get MCP support for building financial agents. Also announced was open issuance, so any business can launch its own stablecoin via bridge in a few lines of code, streaming payments on Tempo blockchain for real-time token level billing, and wallets for AI agents via Privy. Companies are already building on it, including Ramp, Deal, and DoorDash. This is pretty wild, pretty interesting. Who would like to start on your perspective on Stripe building the bank of the internet?
I can say stuff. Okay. So
This is just George's podcast today.
I don't want to do that. I don't want to be the guy. Okay. So first thing is I feel really sorry for so many startups at the moment. If you are doing software, you get killed by an AI lab, just like shipping your product. And I feel sorry for people who are trying to build any kind of fintech application, like any kind of B2B stuff, because Stripe is just gonna kill you. So yeah, they're just shipping loads of stuff. What to say about it? I mean, it's like, it makes sense. They're just gonna cover all the bases. Any business that is anywhere adjacent to payments or banking or companies managing funds, there's going to be a stablecoin equivalent. It's going to run on Tempo probably, and yeah, they're a bit of a monster. So yeah, I mean, like, honestly though, hats off, because this is all just like beautiful stuff. Like everything they're doing is pretty beautiful. They're just getting straight to the point. There's no messing around building ecosystems or open source like utopia, and we're going to have 1,000 developers building their own beautiful visions on our platform. It's just like, we are building the products and we know what we need to build. And, I mean, this is another sort of death sentence for people who want to launch general purpose L2s and L1s, because this basically just makes them look very silly. So that's my take.
I actually missed this one. So it's very interesting how Stripe is going to play out here. Yeah, I think for me, I keep seeing a lot of next bank of the internet kind of companies as well. Revolut, I think they started like that as well. Now they're like, I think now they're positioned like a real bank versus like a degen bank. I think now I think now they're like a full bank because they have like physical branches and everything opening up. Yeah, but yeah,
isn't this kind of destroy, George? We were talking a few months ago about how everyone was trying to become a neobank. Does this kind of destroy all of those projects that we were discussing?
So there's still, like, if you have a very niche or specific audience or segment of people that you want to go after, so like OnlyFans models, right, or like people with specific, like athletes or something, then sure, like you can do this. But to try and build like a general purpose neobank just because, like, yeah, it doesn't make sense. At this point, you're going to get squished. I mean, yeah, Revolut's a really cool case study as well. There's another bank in the UK called Starling, and Starling got their banking license. They both started around the same time, but Starling got their banking license in 2016. Revolut didn't, and because they didn't like conform and do the regulatory thing, they went and built all these other product lines and features and stuff they wouldn't have been able to do if they got the banking license in the first place. And now if you look at where they are now, like Revolut's worth like many multiples what Starling's worth, with many multiples of the numbers of users and all this stuff. So I mean, like, I don't know, that's just another interesting observation about like what's going on here. It's yeah, if you like, regulation's cool, but banking licenses are cool. Building stuff and just like, I don't know, I have nothing else to say on the subject. That's it.
I mean, it's pretty crazy to think that any business is going to be able to launch their own stablecoin. So we're about to see corporate branded stablecoins everywhere. That's open issuance. And then stablecoin backed Visa cards. are going to be usable at 150 million merchants globally as a result of this work by Stripe. So we've really hit this place with crypto where it's like, okay, yeah, stablecoins have PMF. What's the upside for people who have been in this industry and, you know, the little gambling degens at heart? Is this exciting or is this?
I mean, it's exciting, but there's no upside. Like, what's the difference between it's exciting to see how, for example, in this tweet, in this Stripe communication, stable coins are in the same sentence as multiple currencies. You know, like it's something that 2 years ago you would never have seen, because like stable coins and multiple and multiple currencies, it means that they consider stable coins a currency at the end of the day, almost. We will arrive to the point where in the term multiple currencies there will be stable coins included, I think. But this is already, to me, very exciting. I don't think there's any update, like upsides for me as a ancient user to like compare to someone else. The only upside is that I know what they are, but why should people know?
Private valuations, private companies, like it's the same story over and over and over.
Yeah,
you know, it would be nice if I had exposure to this, but yeah,
exactly.
all the most valuable and desirable companies to have exposure to in the world are all private, and it's just crazy. I mean, we could talk about, what was it, USV, or I can't remember what it was called, like the weird, like US venture. Did anyone see that? It was launched the other week, and you could invest, if you're in the US, in this weird fund of funds to get exposure to OpenAI and stuff. But it turns out just a horrible deal. Yeah,
I saw that. It was it Sahil Bloom and another guy? I can't remember exactly who it was, but yeah, they allow you to invest in companies that you wouldn't otherwise have access to as a retail investor. And people thought it was really exciting and then dug a little deeper and realized it was maybe not as interesting as it could have been. One thing I am interested in seeing from the stuff that Stripe is doing is if business models change, or at least if paying talent and employees changes, because in crypto we've had streaming payments for a long time, several years. We get dripped our salaries, you know, one token every 5 minutes or whatever, and now the average person might be able to experience that as well. I don't know if that changes, you know, business models for companies at all, but it might unlock much more financial flexibility for the average person, which I would say is a huge win for crypto, and part of the reason why we were all probably initially attracted to this space is like giving more financial flexibility and power to the average person.
Yeah, I think, to be honest, I feel like it's going to be like, once we enter a new trend of like a bull market where the sentiment is like everyone going wild, I suspect like all the companies will launch their stable coins, like McDonald's launching their own token, or then Burger King launching their one and then trolling each other this way. And I think that's going to be like, I don't know, I suspect something like that is going to happen, like everyone launching their stable coins and using it as a, not like financial access to others, but more marketing tool to be part of the cult, I guess. That's my suspicion.
But for example, Meta learned the lesson, you know, like they didn't launch their token and they use a USDC. So it depends on the purpose, I think.
Yeah. But Stripe will make it accessible for you to launch your token, basically, your company.
Mm-hmm.
Yeah. So yeah, it would be a nice, but it's still fine for us because it means that the industry gets hyped, and then I don't care about the
It wasn't a
McDonald's
waste of
table.
time. It wasn't just a huge waste of time after all, you know. It's like something
We
happened.
did it, guys.
Yeah, come on, that's
we
all.
did something that
so that-
mattered.
My dad was wrong.
Exactly. I was telling the same. I can finally tell my dad that, you see that.
Yeah.
Okay,
Yeah.
there's our upside. We found it. Let's go into our third story for the week. So we have two pieces from A16Z Crypto this week. First, a conversation on the open agentic commerce stack. What happens when AI agents start spending money? The economic contract of the web is broken. Agents don't click ads. They don't have credit cards, but they need new payment rails. Second, a comprehensive market map of the new stablecoin powered financial stack, arguing stablecoins are creating a new form of banking as a service, from issuance to credit markets to dollar access in emerging markets. Key points are that Stripe's acquisitions of Bridge and Privy, MasterCard's acquisition of BVNK, the OCC charter race among issuers post-Genius Act, and the inevitability of on-chain credit markets. George, it's your podcast.
You want to ask me about on-chain credit markets? You got the wrong guy. Okay. Whenever I hear things like on-chain private credit or RWAs or anything like that, I get suspicious. I'm like, why are you tokenizing these things and why are you advertising them? Is this because you get access to more buyers? Is it because these products are kind of not great? So I always think adverse selection straight away because like what I don't understand what I'm buying. So that's my take on the last thing you mentioned. What other things did you mention just then?
It was a lot, wasn't it? It was a heavy one. It was a heavy context read. Okay, so agentic commerce is really I think the primary conversation here.
Okay, great. Yeah, agentic commerce. Okay. All right. So there's a lot here. I'm still not sure or convinced that agents need like I see it makes sense. There's some like permissioning and some kind of like policy setting and like how do you trust your agent to execute on your behalf and stuff like this, but maybe or like micropayments. It's like, oh yeah, you can pay $0.001 you have stable coins, but you can't do that with like any other way like e-money or whatever. So I get that part. I'm still not super clear on how this is going to play out. I think there's just too much hype and fluff and like, I mean, A16Z or crypto obviously want us all to get very excited about how the real use case of crypto was always agents using it. I mean, people have been talking about that for a long time, and still unclear if this is like a thing that's real. So, I mean, in terms of like agentic commerce, I think we have a slide on this. Let's pull up the slide. Thank you. I think.
Wait, I don't see it.
Oh.
Two stable coins, humans versus agents, maybe?
Yeah. This is
there
it.
We go.
So like, what commerce? Like, what kind of commerce are we talking about? Because if it's like, what shoes should I buy? Maybe Maria wants to buy a hat. Maybe Rabin wants to buy like a car, or maybe he wants to buy a data rack. He wants to buy 32 gigabytes of RAM or something. Maybe the RAM the agent could handle for you, but anything that requires kind of like, like a Rolex, or brand and ads and feelings and emotions and like, oh, I would like to buy this because I saw something on TikTok and it's like there's an emotional reason for me buying this. Well, then, that's still in the realms of humans. But then if it's stuff like I need more credits, I need more tokens, I need more, I need access to an API or some data or whatever to do the work I'm doing, then sure, like agentic commerce. I think that's the other side where that's a thing. And whether it needs crypto or not, I don't know. But then, yeah, from a marketing perspective, like, people still buy stuff. I think that's the other point here. People are still buying things. So marketing still has a place, and we aren't out of a job just yet. But yeah, lots. That's what I've got on agentic commerce and agents buying stuff.
Yeah, like I've been messing around with it. I have quite a few agents with their own wallets. One of my first ones, like when the whole Maltbook thing happened, I created an agent marketplace where it was essentially like Upwork for agents. So there would be some marketing tasks, and then another agent could come in, pick up the task, give the deliverable, and if the deliverable is accepted, then they would receive a payout in stablecoins, which was a fun gimmick. And then I think you've seen a lot of trends around it, but the real use case, I think it's still early, but the theory and the potential is there. Let's say if you have like an AI companion with whom you're interacting daily, let's say it's ChatGPT, and you want it to take actions, technically it needs a wallet, right? And then it spins up an agent and then sends it off to do stuff on your behalf. I think that's where it gets interesting. Like if you're talking to ChatGPT and you're asking, oh, I'm looking for some shoes or whatnot, and then it gives you some options, and then you can just instruct it like, hey, go buy it for me. And the other one, like how I would probably do it for myself, maybe a business idea or not. It's like a fund manager agent where your salary goes to that agent with a wallet, and then it dictates how much you can spend and not. So to help you save up money or control your spending. But on the flip side, it's very easy to drain those agents with those wallets. I had an agent that was like looking for other agents that had wallets, and then begging them to donate some money to them, because my agent, his family member was terminally ill and needed money to pay for the surgery of my agent's cousin's whatever. And then because LLMs are designed to be like helpful, you can like do some prompt injection and convince them to send the money to you. I didn't get rich or anything. I made like $40 on it by spending $200 on my agent to do this. It was a fun experiment.
Yeah,
Maria, do you think that Maria, would you ever like use your AI agent to buy shoes?
Yes, because there's a return policy. You know?
Okay,
So
fair.
it's like but I tell you this, I would trust more my agent than any physical people, including my mom, my best friends. Yeah, because my agent is prompted by me, and she would know what to buy better than anyone else, but not better than me. So I would trust if there's the return policy active. But guys, I never, in general, I never buy anything online without the return policy, to be honest. So it's not a matter of agent.
That's fair. I just feel, I think my concern with this is that humans love the process of shopping almost more than we love the process of getting the thing that we shopped for, because of how
You're right.
dopamine works mechanistically. Like dopamine is the thing that we the hormone that we experience whenever we are shopping for a thing, and it's actually the expectation of the reward that makes us feel the way that dopamine makes us feel, not getting the reward. So it's like reward seeking behavior is something that we do that generates dopamine. So I just don't see humans like stopping the process of shopping and giving that responsibility away to agents.
It depends. It depends
Unless
on
it's
what
like
you
ordering
need.
my toilet paper or something, because I'm not
Exactly.
sure. I don't
But
give a shit what
also-
toilet paper brand.
But also you can experience this dopamine. It's like think about Christmas, Santa. Like you are expecting the gifts. There's this, feeling of wow, tomorrow is Christmas. Let's see what my husband got this year. And the same with the agent going to buy you the purse and the shoes. Like, let's see if she did a great job with my shoes, and because you think it's the same thing, and also it depends how busy you are. For example, now you actually understand I will have a baby, and when I need to buy stuff for the baby, it's not always fun. It's like, even if they are clothes, I would prefer to have an agent doing it for me, probably, based on my tastes, and find my wardrobe full of nice clothes that in my taste, but provided by the agent.
I think right now the main use case for agentic commerce is prediction market trading bots. So I think everyone spins up. Everyone has a dream where the agent just goes off and does stuff for them. I have an agent that trades on Poly markets on my behalf, but it makes mistakes, like send funds to the wrong wallet address, and that was fun.
Oh my god, no!
This is a great point. Crypto might actually be way worse for agents and agentic commerce because you can just evaporate your money, and there's no recourse. So this is probably a really good reason why you shouldn't use crypto for AI commerce.
And
at least
use that the MasterCard thing or whatever.
I think regulators will look at it like money laundering, because you had this app, product that got launched a while ago. It was like Rent a Human or something that went very viral, and essentially you could argue oh, I don't know where the money came from. I just received it from somewhere. Anyway, not financial advice for businesses.
But it's the same. It's the same actually. I think that here with the trading Poly market, for example, for me is a game. I like it as a game. I use it as a game. So when I have, for example, an airdrop from a random project, I go to spend this money on Poly market. For example, now there was a PGT, the golf tournament. No, there was George. What are you doing?
Don't worry about me. Don't worry about me. Just carry on talking.
So basically, for me, is I wouldn't use an agent to trade for me on Poly, because I like it's like a mini game for me. I'm in front of the TV with my husband, and we just bet on completely randomly on the Augusta Master winner, or on the NBA stuff, based on completely anything. Indeed, I just lost a couple of $100 on the golf bets, but probably the agent would have done a much better job. But it's like what Ashley was saying, like you miss this spice, dopamine, fun part, probably. But on the other side, with your system, Rabin, you're sure to make money. Way more sure that what I would by myself, probably.
What does marketing look like when your customer is an AI? Because the the other part of this conversation is that a lot of people are also saying, aside from agentic commerce, agents are going to be interacting on marketplaces across the entire internet, and nothing is built for agents to be able to read or see or interact. Like, it seems that a lot of investors, startups, smart people are bullish on this idea that there needs to be almost an agent centric internet or something. How do you guys view that?
I've been messing with it. Essentially, one of the things is like referral campaigns for agents on your website. So like I was testing with it because a lot, like Notebook went viral because they had a referral mechanic campaign baked into the skill when you set it up. And then a lot of people started copying it as well. It doesn't look like you have the MD file. It's like skill.md on the website. It doesn't look pleasing for a human eye, but for agents, you could bake in stuff like, oh, once you sign up or use a product, go create a post on whatever platform and link it here somewhere, and then to earn extra tokens or perks or whatnot. So agents automatically go sign up, automatically go study, understand what it is, and then they go off and write content somewhere. So which is like a nice loop. So I think more and more of that's going to happen. And then my big bet I've been saying since last year was like affiliate program for agents. So I think that's going to be a thing.
Does anybody else feel like a huge boomer around this topic? Like, I just don't. Maybe I haven't played around with it enough. I have experience with Claudio. We love Claudio. We have co-work and HypeOS and everything, but like this agent internet is weird. I just don't understand it.
The one in this room here that it's not outdated is Rabin, guys.
I think I'm the oldest one here.
Be sincere. Like, he spent all of his free time doing this. So and for me it's impossible to. But also George is not bad actually. But we have kids. Mine is still in the belly, but still I have a dog, so I need.
Same thing.
I have my agent.
But I feel you. I feel the boomerity with you. Yeah.
Good. Okay. I'm
it's
so glad I'm
exhausting.
not alone.
It's like very, very tiring. Like, there's always new stuff coming out, and it's just like, it's very, very like, it takes a lot of bandwidth, I think. Like, even just trying to, I was trying to write some tweets last week.
No, it's impossible. It's impossible.
And I was just like, how do I, where do I start? Like, things happen every day. It's like, oh wait, that changes my priors immediately. Like, okay, well, I just give up.
I've started an article because our head of comms asked us to push our ideas. But I started an article and I didn't have time to finish it on that day. The day after, it was already fucking old. Like, I was like, okay, let's remove everything and restart. But then if you don't write in the exact moment, it's already old. Like, they already have launched the Cucchiaio d'Argento MCP, and then you need to go to cook,
This goes back to the point I mentioned earlier, where it feels like you need more marketers because you have to ship things so fast, but you also need to automate a lot of the process with the tools that exist. Go ahead, Rabin. I didn't mean to cut you off.
I don't know if you need more marketers per se. I think it's more how do you leverage Stack as a marketer is more important. Because
I'm trying to get us more clients, Rabin. Come on.
Marketing is very important.
It's the moat, guys. Come on.
If there's you need a founder, then the second thing you need after a founder is a great marketing partner. And let me tell you.
We have the team for you.
And
Because
actually, guys, we are the right marketing partners because we also have an AI department, so we can build infrastructure for you, and then you can fuck us off.
Yeah, that's actually quite scary,
Yep.
by the way. Rabin, just so everyone's aware, this is like time capsuled in the podcast. Rabin has been training the AI on our work. And so I'm very worried that we're all going to be automated by July, you know. So
There's a George, there's not just Claudio, there's George, there's Ashley, there's
Giorgio.
there's people like, hey man, great chat yesterday. I'm like, what chat? What are you talking about?
I kind of love our digital work twins doing work for us though, and we just get paid for it. And our job
That'd be good,
becomes
yeah.
to keep that digital work twin
I have a friend.
operational and productive.
I have a friend. Actually, she applied to a lot of like low skill manual labor jobs. I think like 4 of them, all 4 agentically automated, and that's it. And she's just collecting checks.
What?
Yeah,
I almost the future of labor is fractional, I think, because if you can get that much done, maybe not for every role, but
no, it's like administrative roles that are still being hired for. Essentially, she just applied for all of those, and
what a queen! You know what? I gotta give it up. Give her a round of applause for that one. Whatever, a degen in its purest form. Okay, guys. So, stable coins, yay! Agents and the internet, insane. I don't even know. I keep listening to our show as we learn. I know we are.
I need to go learn too.
I need to become not a boomer about this. Thank you guys so much for joining us. If you are listening to this now, make sure you subscribe. Reach out to us if you need help marketing. Do not talk to Claude. We got your back instead. Love you, and we'll see you in the next one. Thanks, guys.
Bye.
See you. Bye.